I'm Andrew Jack from the Financial Times. For a long time, amongst other things, covered health as well as development issues, now more focused on education. Great to speak to you, Michael. And remind people, so your role exactly is what?
I am CEO of MedAccess, which is a social finance company.
So let's drill down a little bit. So what, in high level terms, and we'll discuss this obviously in more detail, but what really is MedAccess?
MedAccess is a non-profit company that behaves like a business. We engage in commercial transactions, but with a motive to achieve health impact rather than profits. And our core function is we engage in something we call market shaping. Core purpose of that is to make health products more widely available at lower prices. That's the essence.
And if you look at, the development in the health field very well, and you've touched on it in many different ways over the years. So what was missing that really explains the need for these new approaches?
Well, at the core, MedAccess is a stack of capital that can be used for credit enhancements and for guarantees. And we basically work with businesses and procurers to de-risk their operations. And prior to MedAccess, what we had was a lot of grant money around, a lot of investment money that was seeking returns, but this catalytic use of capital to find ways to de-risk and get products in the market faster and get them in at larger volumes and at more affordable prices, that sort of money wasn't around. There was very small amounts of it. Some pioneering work by Gavi and by the Gates Foundation was really impactful, but there just wasn't enough. And so MedAccess was created to try to fill that gap.
Because I suppose a market-focused person might argue, this could be sorted out naturally by the market. There ought to be demand for new medicines or other health products. Why do we need some additional, as it were, artificial mechanism on top of that? What would you say to explain this need?
Well, exactly. We're all taught in universities that market's clear and that markets will sort out the problems. And it turns out that markets are often imperfect. And one of the things is that manufacturers look at markets in Africa and some of the other lower middle income countries, and they look at those markets and think, gosh, those are really risky. I don't know if I'm going to be able to sell enough product or what the regulations are going to be, or if there's demand this year, I don't know if there's going to be demand in future years. Therefore, it's commercially risky to go into this market. And they decide to hold back. Or what they do more routinely is will sell a small number of products at really high prices. And on the other hand, what you have is buyers, especially governments, but other hospitals and others, would like to get hold of products, but they don't know if there's going to be security of supply or the price they're going to pay now is going to be the same as the price in 3 months' time. So there's just a lot of uncertainty on both sides. And what MedAccess does is we come in and we de-risk that transaction. We make a bridge between makers and buyers. And that makes the markets work in the way that our textbooks said they ought to work.
So at the start, there's, as you say, these imperfections, lack of knowledge, momentum, critical mass, risk, and so on. In the normal or the ideal scenario, at least, does that taper out over time to create something where you can pull back and the market, as it were, or the suppliers and the clients, the customers, the government or others will be able to take over without any additional intervention in the middle?
Well, you expressed that much better than I would have. That's exactly what we're after. The whole point of one of these guarantees is it's a temporary intervention to get the market to a place where there's higher confidence and less risk on both sides. And then we pull away. And at that point, what we're after is that the price equilibrium will have dropped, but the availability equilibrium would have gone up, and they've hit a point that is stable and reliable, and the market will keep itself there. So far, 8 years of operation, so far that has worked. In general, they're designed so that that's the aim, and that's the way they should turn out.
So we'll talk about in a minute about more specific examples, but what's the sort of typical or ideal duration, do you think, of the need for this additional market shaping intervention before they fly on their own?
It's a really good question. For each one of these, we look at the product and the market, and we look at who else might come in as other suppliers. We look at what's happening with demand, and we make judgments about how long it needs to be. The shortest we've done is 2 years. The longest is 8 years.
So we'll talk about some specific examples in a second, but just sort of sweeping back into history and maybe thinking beyond health to other fields. Any examples in the past several decades, perhaps, where market shaping has proved important and validated?
Well, absolutely. So what the electricity market has been doing this for decades. In a previous life, I used to be a lawyer, and having having contracts where you either take the electricity or you pay for it. That's really common in electricity markets. And that's at the core of what we do is we create these volume guarantees. We say, well, you're either going to sell enough product or we'll make a payment to you. That's kind of the logic. So it's been electricity markets forever, but the really big breakthroughs were the Gavi, the Vaccine Alliance, did the pneumococcal AM's advanced market commitment, which helped bring pneumococcal vaccines into the market at lower prices for the first time. But we also had big volume guarantees on things like contraceptive implants, these small devices that go in the upper arm, subcutaneous injection. They stay there 3 to 5 years, 3 to 5 years of contraceptive cover. They were being sold at really high prices in Europe. That wasn't selling in Africa. Volume guarantee helped bring the prices down, and then suddenly demand took off. That's the kind of magic which we're trying to achieve.
So these are two past examples, and they were prior to or distinct from MedAccess. Yeah.
Both before MedAccess.
Yes. And how did they, or how have they played out, those two, for example?
Well, I mean, we now, pneumococcal vaccines are very widely used, a really big component of Gavi's work. And of course, we're always innovating. So the pneumococcal vaccines that were initially brought in will soon be replaced by ones that have more valences, as they're called, more types of pneumococcus they cover. The volume guarantee for the contraceptive implants was really transformative. It really did revolutionize access to this particular kind of contraception. And we saw, back in 2012, we had huge numbers of couples in the world who couldn't get access to contraception. That gap has dropped by more than half. And in part because these products were available for the first time in a sustainable way. And this was at a time this was a time when some of the manufacturers were thinking about leaving the market entirely because there wasn't enough demand. So those two have worked really well.
And what have been the lessons from those in terms of, perhaps limitations to them, or why they haven't spawned other similar sorts of mechanisms for other health products?
It's a good question. So one of the challenges is, in order to put one of these guarantees together, there has to be a lot of analysis of what is the supply and what is the demand, what's the market like, who are the other suppliers who might come in. So, one of the things we do at MedAccess is we have a big team that do the market analytics prior to the finance team then coming in and negotiating the contracts. That kind of analysis is pretty labor intensive. So there has to be a commitment. There normally has to be some kind of public funding to make that possible. The market on its own is not likely to do that. That's one barrier. I think that the other one is that we're looking for particular moments when a product would benefit from this financial guarantee. So it's a very powerful tool, but only works in some circumstances. I'll give you an example. There's this terrific substance called oxytocin, which is a hormone we'd like to make available to people around the world because it stops postpartum hemorrhage. Unfortunately, the price of oxytocin is also already really, really low. So using a volume guarantee is not actually going to solve the problem. The problem we have with oxytocin is cold chain and problems with quality. And those are problems which are much harder for this set of tools to solve. So this isn't the magic bullet for everything, but when it works, it's a really powerful tool.
So what was it that sparked then, after these past examples and debates, the origins of MedAccess? How did it come about?
Well, for me personally, I was Director General in the British Aid Ministry, the Department for International Development. I was sitting down with Chief Economist Stefan Durkhan, our Chief Scientist, who's now the Chief Medical Officer for the UK. And we looked at what were the impacts of the various programs that we had funded over the years. And it turned out that market shaping was one of those things. We hadn't funded a lot of it. The impact per pound mobilized was really, really high. So for me personally, that was the start with the fascination of, gosh, this is a really leveraged, catalytic, impactful kind of intervention that could be done. And Chris Whitty, the Chief Medical Officer, you said these are the kinds of things we should think about applying in a much broader range of devices. I then left the department, went off to do other things, but the team kept working on it. And they came back with the proposition, would you like to found this company to do this very thing? So that was it. I think, Andrew, it was the lesson of experience of testing it out and seeing, gosh, these really have a big impact. Let's do some more.
Is there sometimes a tension? Because as you say, you normally need to leverage some government funding, some public sector funding alongside private. sometimes, obviously, traditionally people have thought of this as a development issue and something, therefore, you should support other, non-profits or governments. How much political tension is there in trying to leverage governments to support something which ultimately, I suppose, the private sector is the beneficiary, and it's a sort of quasi-private structure that provides that catalyst?
I think you put your finger on what is probably the biggest challenge, because at MedAccess, we say we have the brains for business, but heart for humanity. The transactions we engage in are really commercial. They're sometimes financially quite complicated. It's very detailed. It's the sort of thing one would see in the commercial world. And we're working with manufacturers. The global health community is always nervous when the private sector gets involved. They're nervous about manufacturers going to get some subsidy that's unjustified or illegitimate. So there's a lot of political nervousness about that. On the other hand, some of the other actors look and say, well, gosh, the market should be sorting itself out. Surely companies should be doing this on their own. So and what we do is we combine some public money with some private money, and we put together these transactions somewhere in the middle. And that sort of combination is difficult on both sides. You get both private sector and public sector suspicious of it. So part of what we have to do is we have to keep explaining why it's a valid thing, why it's appropriate, why we're observing good practices throughout, and why it benefits humanity.
And talk about then the different contributions from both public and private sector. How's it structured? What's the sort of level, the share of resources, and the number of organizations or countries that have got involved?
So our founder is British International Investment, which is the British development finance institution owned by the British government. They provided $200 million for us to have in the bank. And our financial model is that we earn interest on that, and we engage in guarantees. We've now expanded, so we can provide loans and working capital to companies if they need to expand their manufacturing as well. But that's the core investment. And on top of that, we do charge businesses for the services we provide where that's possible. So if we're providing a guarantee for a company to de-risk going into a new area and there's enough margin in the sales, then we ask them to help contribute to our costs, which is only fair. Sometimes the price has come down so far that there's not enough margin for the business to contribute, in which case we have to seek grant money to help fill that space, contributing to the costs. So there are three different income streams. There's commercial seeking fees, there's grant money, and there's this core capital investment on very concessional terms. It's a funny mix, and we're constantly trying to put the jigsaw pieces together to make sure it makes a good picture. So far it has, but that's the model.
But essentially you need to keep going out and raising more funding support, or are there some examples where you've actually generated a surplus that you've been able to, as it were, reinvest and expand into new projects?
Well, so if we just stayed to a small number of transactions of the highest volume, we would be able to cover our costs. But we've discovered that these tools are so powerful in new areas. So, for example, new areas like diabetes and sickle cell disease and cancer, nutrition, areas where we're expanding into, the volumes are not big enough to be self-sustaining there. So we need to continue to get grant funding to allow us to expand into those areas. One new area we've just agreed with the Wellcome Trust is to support us in helping to find ways to get lower cost mental health products, particularly for schizophrenia and extreme anxiety, to roll those out. Now, that's the kind of thing where the market's just not strong enough commercially to support what we want to do. So we definitely need grant funding for that kind of activity, even though if we finally proceed, it will be a commercial transaction in the end.
And any examples where there has been a surplus you've been able to generate?
There are several examples where we've generated good fees from the company. At no point has that ever covered all of our costs and all of our risks.
So you have different layers of finance, including the initial support, but then donor grant funding as well. How does that money specifically get spent?
Yeah, so when donors support us with grant money, it supports three things. One is it supports some of our staff time, because it is labor intensive to do all the analysis of supply and demand. It supports some of our staff time to do that analysis and put the transaction together. That can take years. Because we sometimes have to wait for regulatory changes like WHO approvals and so on. Second thing is some of that grant funding helps us to pay our risk charge. We do an assessment of what's the probability we're going to have to pay out on this guarantee, and helps cover that risk charge. And third thing is we use grant funding to contract with entities on the ground to help support demand. So organizations such as PATH and the Clinton Health Access Initiative and others. And that helps to ensure that there's regulatory changes on the ground and there's uptake by governments and so on. So that's how we use the grant money, is all along the chain, from developing the transaction, implementing it, and then seeing it through right to the end.
What's the value added of the teams, and how do you end up dispersing particularly the donor grant aspect of each project?
So MedAccess teams come in three sorts of flavors. We have people who come from banking, financial backgrounds, investment backgrounds. We have people who are clinical or epidemiological, understand public health. And we have people who understand market dynamics, including manufacturing dynamics. So there's a lot of detailed work. If I take, for example, oxygen, started off years ago looking at the variety of ways in which oxygen can be manufactured and transported and distributed. So it turns out there's no single consensus about what is the best technology. So there's a lot. We worked with PATH and others on what is the best approach to generating oxygen in a reliable way. So a lot of technical work. Then lots of market analytics of demand. How much funding is there? Which countries have the highest funding levels and the most demand? What does the patient need? What are the distribution systems? So we send people out into the field to talk to people in labs or in hospitals, in governments. So a lot of on-the-ground testing of what's wanted. And we always test to make sure that governments actually want this product that we're talking about. Not only governments, but health professionals. There's no point supporting a product that doesn't have support on the ground. So we do a lot of that. We then negotiate, and with the manufacturer, doing mutual negotiation and looking at, asking the question, are there any ways to reduce the COGS? So we, on one of our transactions at the moment, which is not yet public, we're paying for a consultant to help the manufacturer work out ways they can produce the product more cheaply. So we use grant money for some of that. So grant funding helps to cover all of those sorts of activities. And it can take years for our support for the tuberculosis treatment. It took 4 years from start to finish to do all of that work. And we had to wait for the WHO to change its recommendation before we could go live with the transaction. Do all of that. The second thing the grant money does is it helps pay our risk charge. And then the last thing is for a lot of our programs, we have really detailed support for helping to roll the product out. So we have supported the world's first HIV self-test for less than $1. It's absolute revolutionary. It hasn't happened before. But uptake of that product depends on regulatory bodies approving it. It depends on governments recognizing it's cheap and effective. It depends on users knowing how to use it. And so we've contracted with CHI, the Clinton Health Access Initiative, to help ensure that all of that is smoothed out over the life of the volume guarantee.
It often occurs to me that there's a lot of focus and excitement around scientific innovation, but often much less focus or understanding of the complexity of innovation around business and management and outreach, procurement, all those other logistical issues.
Absolutely. Absolutely. Everyone's fascinated on what does the science say. And in fact, this other stuff is often 80% of what needs to be done.
Then let's talk about some of the individual projects then. So what was the first that MedAccess did?
So the very first guarantee we did was to support a company that produces diagnostics, molecular diagnostics for viral load testing. So for people who are living with HIV, the first thing is they need to be diagnosed. Second thing, they need to get on treatment. And then the third thing is we need to test either every year, every 6 months, depending on the protocol, about whether the treatment's working. So we need to know how much virus is in the blood. And so there was a big ramp up across Africa. This is 2016, 2017, to get more viral load testing out so we can hit the target of getting 95% people tested to see if their virus is being controlled. So we worked with an American company called Hologic and asked them to come into Africa. They had not been there before, asked them to come into Africa. And the proposition to them was basically come into this place where there are lower margins, higher risks, but also huge need. And the pitch to a company like that is your purpose, your core purpose is to produce magnificent products using the best of science and manufacturing, but to get them in the hands of people who need them. And this is a way to really expand the reach of the products. But we asked them in return, set a ceiling price. So we were looking for them to drop the price down compared to what was in the market already. We also asked them for radical transparency on their costs for procurement. So the way this kind of testing had worked before, companies weren't always entirely forthcoming about what's the cost of the consumable chemicals, the reagents, the software upgrades, the maintenance, and so on. So we asked Hologic to put all that together into one bundle and wrap it up as in one price per patient test. So they agreed to do that. And that was quite revolutionary because suddenly governments had vision of how much the testing was actually going to cost without all the add-ons coming in later. So Hologic came into the market at a price that was about 35% lower on average than the existing suppliers. And they grew their market share. But of course, the other suppliers then brought their prices down to match that as well. We did that for 4 years, rapidly increased access to viral load testing, which was the point. Saved governments a lot of money, which is also part of the point. But most of all, helped create a healthy market in which there was better competition, there was more supply, and all of the companies had strong incentives to make sure they were keeping the machines well maintained and operational. So that was the first one.
And you raised an interesting point about transparency, opacity from the corporates. I recall with the AMC, that was one of the concerns, wasn't it? Are we giving essentially a big subsidy and the companies aren't necessarily honest about the true costs and so on? How can you sort of provide some assurance that you are getting, the true figure and therefore there's a fair margin for sustainability, but not some excess rent?
That's so important. I mean, the whole secret is finding ways to make sure that companies are generating profits, enough profits to stay in the market, to be commercially viable, to have the incentives to provide high quality products, and also to innovate in the future, and also to not earn these very high rents. And as you said, with the pneumococcal vaccine advanced market commitment, there was concerns about, well, a price was set here. How do we know that was the right price for the product? And so what we do at MedAccess is every time we engage in a volume guarantee, we publish a call for expressions of interest. And we make sure the companies who might be manufacturing this product know about it. And we encourage them to apply. And we ask them to send in their information about what could they do if there were a volume guarantee to reduce their risks. What could they do in terms of pricing and volumes and other commercial terms? And we then select out of that group, sometimes it's a dozen or more, we select the ones that are closest to meeting the market need as we see it. And then we negotiate with them. And we then often work together to talk about, well, what are the commercial terms? What is the price volume matrix? What are the trade-offs between how much you charge and how much you can supply? What are the risks? Because we want security of supply as well. And then it's a process of negotiating. We quite often, and the key question is, well, how much does it cost them to produce this stuff? So we always do an analysis of what's their cost of goods for sale. So we have a sense of how much it's costing them, what their margins will be, and we rarely get perfection on that information, but we get a good estimate. And we also see what other companies are willing to do and find a place where we strike a balance with the company so that we're looking for a price that'll be commercially viable, volumes that are achievable but stretching, and terms that are going to work for the company. It is an art, not a science. And will we have made mistakes? Almost certainly. It'd be impossible to do this without making some mistakes. But that's the effort.
Are you able to audit the internal figures of the companies to provide some reassurance?
Usually not. Usually they're quite transparent about some aspects of their costs, but the way that costs of goods for sale are calculated, there are normally lots and lots of other broader corporate costs that are calculated in. And that's the question, is how do we know how many of those broader corporate costs actually are legitimately built into the price here or not? And the truth is, those are judgment calls. Even the company themselves, they often don't know completely. So it is a matter of making judgments.
Of course, another criticism sometimes is that you have one or perhaps a couple of different companies engaged. Does that risk creating a sort of monopoly that then excludes others?
It is such a good question. And it's a common myth about this kind of market shaping is it creates monopolies. And I can say, looking back on 8 years of experience, that has not happened once. Our aim, we design these interventions right from the start to think about, we don't want monopolies. And our aim is to crowd in other manufacturers by demonstrating that there is a market. And that has worked in every single case. So that is rightly a concern. But I think we've discovered that through careful management of the design, we can ensure that others come in. It does mean we need to make sure that the margins are high enough. There's still incentives for others to come in. I should say there's one exception to this, which is there was one case, a diagnostic test for a kind of enzyme that we need to know about for treating P. vivax malaria. And there's only enough demand really to sustain one manufacturer in the market. And that our volume guarantee was partly to help make sure that manufacturer would stay in the market and the market would not be entirely abandoned. So that is the one exception. But the pricing there is very reasonable indeed. So,
but other suppliers who then get into the market, they won't get any of the same incentives. They can't buy into the program, as it were. They'll have to just match pricing.
That's absolutely right.
What about this issue of, if others come in later, do they still get some of the potentially same terms, or they're on their own?
If others come in later, they don't get benefits of this. There was one guarantee, we didn't do it, Gates Foundation did it, where they guaranteed 2 companies simultaneously because they felt they needed that to get them both in. But so far, what happens is other suppliers come in. When we do the guarantee, what we ask the company to do is come up with a ceiling price. And it's up to procurers to see if they can negotiate a lower price if they want to. And in a lot of cases, that has worked. The prices come down. I'll give you a good example with the contraceptive implants. It started off at a price of $8.50, and the price gradually reduced. So now it's at $6.90 in the market, $6.90. So as other manufacturers come in and see that there is a market for this product, quite often, then they do sometimes drive the price down even further. But that's competition. We don't regulate that at all.
The other criticism, I suppose, or that comes up sometimes is this sense that you get locked into a particular technology, and then, other things coming along don't maybe get the same pickup as they should do, even as there's innovation to more effective or cost-effective interventions.
That is a concern. And I think we have seen a couple of cases, fortunately none that MedAccess has been involved in, but we have seen some cases where the global health community has locked in on a particular technology. It becomes very comfortable. Everyone's familiar with it. It assumes market dominance, and then it's quite difficult to shift. So it's worth keeping an eye on. We design our guarantees to ensure that they're of the kind of duration that we're not locking in technologies. And we're always tracking what are the next technologies coming down the road that might displace this one. So it's certainly worth watching, but so far we've managed to avoid that problem.
So, but if there was to be a unanticipated and rapid acceleration in innovation, let's say, is there any way to recalibrate the original structure, or you're just sort of locked in to whatever was agreed at the start?
Good question. Sometimes the contracts are written so that if we expect an innovation coming, then we write clauses in the contract saying if that happens, we'll have to look at the volumes again. But I think on balance, and there are so many new innovations coming, artificial intelligence in the area of diagnostics, for example, is driving so much rapid innovation. I suppose MedAccess is increasingly at risk that we will back a product for a period of, say, 4 years, and someone else might come in and disrupt that. So if that happens, we would lose some money. We'd have to pay out probably, but it'll be a good thing for the world. And on balance, that's what we're after.
And naming names, those non-MedAccess programs that sort of didn't quite work, what were the cases there?
I think the single biggest one is when there's a new mover into a market. So this is particularly true of certain diagnostic tests, that once companies get market share and they get established in labs and everyone becomes familiar with them, then it's quite hard to move them on. I think one of the things that sometimes goes wrong, especially where there's big buyers, so if there's a monopsony buyer, one of the things that go wrong is they drive the price just too low. And We saw this some years ago with rapid diagnostic tests for malaria. At one point, there were 8 different manufacturers for rapid diagnostic tests for malaria. By the time we got to COVID, there was only one left. And that was in part because that one supplier was willing to supply at a really low price, but all the buyers had colluded with that. They'd pushed the price down as low as they could go. And then during COVID, that one supplier discovered that they had bigger demand for rapid diagnostic tests for COVID than for malaria. So the world nearly lost its supply of malaria tests for a while. We didn't in the end. An agreement was done to keep them in. But it shows the risks of pushing the price so low that you only get one supplier.
In that case, they pushed the price back up again to keep them in.
They did. There was, well, there were a variety of things were done, but yes, there was a slight marginal increase in price.
So let's talk a bit about the variety in the portfolio today then. What are some of the other areas that you've had innovative approaches?
Well, so we started off with HIV, TB, malaria, those core areas, and had some really big breakthroughs there. So we supported the world's first malaria vaccine. That wasn't quite a volume guarantee, it was a different, but took some financial risk. It was quite a big one. We took more than $50 million of risk. So had it not worked, I probably wouldn't be here now. Had it gone the wrong way. We also supported the world's first dual insecticide bed net for mosquito nets. So got some big wins there. So HIV, TB, malaria, the exciting new treatment for tuberculosis, for drug-resistant tuberculosis. It was the case previously that the standard course of treatment for drug-resistant tuberculosis was 9 months long and was 5,000 tablets on average. We helped support bringing in a new regimen at lower price, which reduced it to 6 months, and it went down to 900 tablets. That's still a lot, and tuberculosis drugs have a lot of side effects, but what we saw was increased effectiveness, much better patient adherence to the programs. So that helped bring about a revolution in treating drug-resistant tuberculosis. So that was those core 3 diseases, and we'll work on them a lot. Work on vaccines, as I've mentioned. We then branched out into doing procurement guarantees. So we provided UNICEF with a $50 million guarantee to allow them to bulk buy products when they weren't sure of the demand. We did that initially during COVID, but then continued thereafter. We continued doing that. More recently, we've been expanding out beyond these core areas, beyond infectious diseases. So we've done guarantees recently for supplies of vitamin A to fortify foods, supplies of radiotherapy treatments in East Africa. So these are really big machines. We help to amortize the capital costs out over a period of years, and a per patient treatment model, similar to what I described earlier with the testing. So we moved into oncology, we moved into sickle cell. We've just done 2 transactions for manufacture of oxygen in Africa, where we're doing volume guarantees. And this is, local manufacturing is a really important area where it's easy to get investors to come in and help build the plant and hire the people. But then lots of companies don't know if they'll be able to sell enough. And so what MedAccess does is we're able to come in and help de-risk demand. And that enables these companies to produce more oxygen than they would have otherwise, and to help ensure that the gap in oxygen supply, and medical oxygen is so critical for keeping kids alive, not just COVID. And so that enables companies to expand faster and hit lower prices than they would have otherwise. There's a range of some of the things we've done more recently, expanding out into non-communicable diseases, more manufacturing, helping to build a bigger, more robust supply base to fill the gap in access to health products.
So over these different projects that you've done to date, what have been some of the lessons learned and the modifications as you've structured more recent projects?
One of the key things is to ensure that we anticipate what the company will need. We pride ourselves on serving sort of three stakeholding groups: the manufacturers, people who are doing the buying, but also third, the ecosystem, the global health ecosystem, including patient access. So we want to pay attention to all 3 of those at once. So we need to pay attention to what might change in those 3. So it's anticipating when we draft the contracts what might happen in regulatory terms, for example, what might happen in the systems companies use for manufacturing. Might there be innovations there? What might happen in the combinations of products that are favored by the World Health Organization? So we've got much better anticipating what might happen and building that in. We become much more flexible in terms of understanding what are the business needs. Sometimes the business needs are for volumes, but sometimes they're for other kinds of risks in the market. So we've grown more flexible at de-risking other kinds of risks. There'd be the regulatory or supply chain and so on. So we're able to help that, but all in the name of ensuring that there is adequate supply at low prices.
So what does that all point to for the future? Are you thinking about some new areas and new structures that you've been able to do to date, drawing on those lessons?
Well, the world has changed a lot in 2025. The global health world has changed so much because we've seen big cuts to aid programs. We've seen this reassertion of health sovereignty. Countries want to be in the driving seat. Over the next 10 years, we want to be there for those changes. And there will be more country-driven demand. There'll be more national procurement. National health insurance systems are going to play a bigger role. So we want to be there as these systems evolve to be able to make bridge between makers and buyers. One of the things we can do is we can stitch together global demand. So you get, for example, a recent product we were looking at, the Global Fund for HIV, TB, malaria, was looking at a new product, but they only purchased 36% of the total global production in low and middle income countries. What MedAccess can do is we can also help to guarantee the offtake in the non-Global Fund countries. And together, combining those two, we can achieve a global level of sales that drives up volumes, but also reduces prices in a way that any single country, say, couldn't do on its own. So new world, we're going to be there. But what are the things we're looking at? There's 6. So one of those, we want a lot of proven products that are not out there available enough. We want to scale up what's proven. Second is we want so much innovation happening in the next 10 years. We want to accelerate those innovations into market. And that's proven. But these tools are great for getting new products into market faster. Third, security of supply. Our supply chains are really insecure at the moment. That means we need more suppliers and ensure that the supply chains are solid in terms of the way they're capitalized and so on. Fourth, more local manufacturing. There's a big piece. We saw during COVID that, Africa in particular didn't have any vaccine manufacturers. That led to big supply chain challenges. So we're geographical diversity of manufacturing to shorten supply chains and ensure their security. Fifth, there are new procurement systems being invented, new private platforms, new health insurance-based platforms. We want to be right alongside those to make sure the new procurement systems are fit for purpose and avoiding some of the big errors. And last, sixth, we want to help countries who want to purchase things. We want to make sure that their national finance goes as far as possible. So I use the example of the radiotherapy machines. That allowed countries using their own resources. There's no donor money involved at all. Just using their own resources allows them to get access to products they wouldn't otherwise get access to using their own national resources. So it's getting closer to national governments and helping provide them with solutions while also helping manufacturers get into markets which they would otherwise find difficult.
And new areas of health that you're looking at in particular?
Well, I mentioned mental health is a big growth area, really big chunk of global disability adjusted life years affected by mental health. That is a big area. We're going to continue to expand into some of the clinical products. I mentioned medical oxygen, but the broad range of clinical products are still in short supply. Talked to a surgeon who does breast cancer surgery from Kenya, and she was telling me that the cost of a scalpel in Kenya is 4 times the cost of a scalpel just on the market in London. And so she solves that problem by coming to London, buying a bunch of scalpels, putting them in her suitcase and taking them back to Kenya. And that's just one example. There are many, many products that are sold way above global prices. And we'd like to help crack some of those. But last, non-communicable diseases in general. It's the cardiovascular, the diabetes. It's the range of things which are chronic diseases that countries are increasingly dealing with. And they don't have donor funding for doing it. So we want to be there to help ensure those markets work well.
Again, back to your example of the Global Fund. Obviously, principally the optimum approach is differential pricing, isn't it? So, but in a case like that, where the Global Fund's negotiated for largely lower middle income, and you might, as you say, kind of join the dots to some others that are beyond that, presumably slightly richer countries, how would you differentially price for that? And would that be the most equitable approach?
Well, I think tiered pricing is a part of the solution in most markets. And actually, many of the countries that are most underserved at the moment are the upper middle income countries. often countries that have graduated from support from the Global Fund or from Gavi, they leave that donor support envelope where they get access to good prices, and they don't have the clout to negotiate good prices on their own. They're often the most difficult situation. So frequently the prices in upper middle income countries will have to be higher, but predictable and subject to a ceiling price. So we see that as a real growth area for the work that we do, helping poor people in those countries get access to products, while recognizing that the pricing won't always be the same. There will be tiered pricing, and that's part of the world we work in, and that we need to accept that, but work with it and make sure it's fair and equitable.
And as we said, obviously the world has changed very much in 2025. Obviously aid has been massively cut back, but also obviously austerity measures, not least in the UK and elsewhere, as well as many lower income countries. So how much momentum and support and potential for expansion of a model like MedAccess is there even in that quite difficult environment where there's such a fight for resources and priorities, and actually maybe an increasing, looking local, a sort of populist nationalist sentiment rather than solidarity with other countries?
There are two things going on there. One is less aid money around, and the second is that countries, increasingly governments want to do it on their own. But in Africa, for instance, there's a big interest in a pooled procurement mechanism for all of Africa, big interest in pulling together and collaborating. Having technical expertise to help with that is going to be really valuable. So we think there will be a place there. And we should expect there's going to be what a lot of governments are now calling health sovereignty. We expect that's going to be strong for the next few years. And we will need to work with that and listen carefully and be responsive. I expect that. I think for MedAccess, our core proposition for our work is the one that initially drew me into it. And I talked about, talking with Chris Whitty and Stefan Durkon about impact of various projects. At the core, it is that a limited amount of money can go a really long way. I mean, so far during our history, we've not had a guarantee called once. So we've been able to use the money over and over and over again. And it's had really big impacts during our since we were founded in late 2017. We've reached some 559 million people with health products, and saved governments in excess of $200 million. And we also measure health outcomes, some pretty stunning disease and death being averted. So that's worked. The leverage has been great. It's making the case you need to keep supporting this. And that's my job every day. Just keep doing it over and over and over again. And part of the reason why we want to get the message out about market shaping is a lot of people don't understand it. It's quite complicated, a bit technical. After listening about it for a couple of minutes, quite easy to switch off. So part of what we want to do is deepen understanding of it. One last thing I would say about that is there is a dystopia on the other side. As the global health system changes and we have more fragmented procurement, what we could get is really, really fragmented systems and prices going up, supplies becoming unreliable. And the worst possible outcome is replicating some of the aspects of for example, the US health system, which, very, very high transaction costs, really high prices, and not serving the needs of people. So it's in our hands. It's all contingent. We have the next few years to shape what it's going to be like. And we think market shaping is a really important part of guiding the global health system to a better place.
So you're fairly confident both for MedAccess's continued development, but also perhaps even for some equivalent market shaping entities in other spheres outside health?
Good question. I think we are seeing market shaping grow, for example, in areas like climate change. There's a lot of interest in advanced market commitments and volume guarantees in low carbon technologies, but also mitigation measures, things like kelp production, for example. So there's a lot going on in the climate low carbon area. We're seeing market shaping, having started off with a small group of practitioners. We now have really big market shaping practices in organizations like UNICEF, Gavi, Global Fund. Africa CDC is definitely going to be doing this. There are a lot of organizations that are growing their expertise in this because they see how much impact it makes. So I do think as a discipline and as a phenomenon, it's going to continue to grow, and governments will want it. So I think the future is bright. The funding is always contingent, but the future of the concept is a strong one.
Okay, Michael, thank you very much.